All right, guys, so this strategy is super effective. You'll make it tons of profits, but you have to be very patient and just make sure that every confirmation that I will be explaining in this video is met before you make an entry. Most importantly, always endeavor to try out these stuffs on demos and make sure you are conversant with it. Make sure you understand it perfectly before you even attempt it in your real account. All right, and if you make money, do well to share your good testimonies, share good reviews, share go to the comment section and just share your reviews. And if you also have issues, you could still constructively share the reviews so that people can learn, and also reach out to me. My WhatsApp number will be in the description box of this video, so you can reach out in case you need clarity for anything. I'll always be on the other side to attend to you guys. Okay, if you are new to this channel, make sure you subscribe. Make sure you turn on your notification bell so that anytime I post a new strategy, you'll get it firsthand. And also endeavor to share so that every other person who might be so that anytime I post a new video, you'll get it firsthand. So that anytime I upload a new strategy, you'll get it firsthand. And also endeavor to share so that every other person who might be interested in learning a thing or two from this will also benefit. All right, so quickly, let's go into details. We are going to be using 3 powerful indicator setups for this particular strategy. We are going to be using the awesome oscillator, we are going to be using the Ichimoku, we are going to be using relative strength index. Now the setups are really tight. They will help you detect market directions. They will help you detect areas of possible reversals in the market. These are the places in the market that every trader is interested in, right? These are the areas where you want to execute your trades from. Once you are able to spot a direction, the next thing you want to be looking out for is an area of possible reversal, right? An area of interest, your supply and demand zones, your resistance and support and resistance zones, right? Clearly you can see that price is going down right now, and this is for the boom 1000 index market. We want to be selling this particular market. We want to be selling the boom 1000 index market while we buy the crash 1000 market. Everything I explain in this particular market right now, I'm going to explain how it works for the crash 1000 index market, right? It works differently for the crash 1000 market and differently for the boom 1000 index market. Okay, so as I was saying, you could see that the market was already selling down, and before this spike that just entered now, you can see that there was a successful closing of 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 16, up to 16 candlesticks closed bearish successfully before this spike happened. That means this strategy is going to possibly give you successful 10 candlesticks, especially if you follow all the conditions that I'm going to be explaining in this video. Okay, so pay attention and watch till the end. Make sure you don't skip any part so that you get value. All right, it's not enough to just jump in when you see a direction. Okay, you have to have several other confirmations that gives you conviction that the market is most likely going your way. Because sometimes you jump in because of just one thing that you see. You might not confidently stay in the market and take your money the way you're supposed to, right? You just might be panicking out, especially with this pullback that just happened. You might panic and leave the market, whereas you were supposed to stay in, lock in, and hit your target and leave the market with profit. Okay, so I'm going to share in this video how you can gain confidence and stay in the market. Take 10 candlesticks at least and leave the market. If you want to play safe, you can just target 5 candlesticks and leave the market with some good profits. Okay, so let's quickly go to the higher time frame. We are going to be looking at the 1 hour time frame. Now, the reason why I wouldn't place a trade after seeing on the 1 minute time frame that the market was going downwards is because of what I'm seeing on the 1 hour time frame right now. If you notice, there is a bullish momentum in the 1 hour time frame. Now, the 1 hour time frame, the higher time frames are more significant to me than the lower time frames, even though I want to be placing my entries. I want to be making my entries on the lower time frames, right? The higher time frames gives you a clue of what the market is going to be doing, while the lower time frames gives you clarity on when you are going to be executing. All right, so having said that, you see that on the 1 hour time frame there is a very strong bullish momentum. You see price closed bullish here. Closing price is very important to me than whatever is happening right now. I'm more interested in how the price closed previously before the current running candlestick. Okay, that doesn't mean you have to ignore the current pressure in the market, the current movement, the current momentum in the market. You are not to ignore it totally, but the previous candlestick tells you a lot more than the current one will tell you. Reason is that the current one has not ended its movement. It can be going up and the next thing it closes downwards. Okay, so you don't need to really depend on the current running candlestick fully. So you always look at the previous ones. Okay, so now on the 1 hour time frame, you can see that price had come to a certain level where reversal usually happens, which is the support level. All right, the support zone where reversal mostly happens from. And you see when price gets to support zone, we are looking to buy, but in this strategy we are only selling, right? So we are looking for how price will be at, we are looking to see price at the level at the resistance level here, level 90 of our RSI. RSI is the two black lines above. The two black lines I'm highlighting here. Let me use the arrows and just show you guys. These are the two black lines I'm talking about as level 90 of the RSI, and then this is level 10 of the RSI. Okay, so price had come to the level 10, which is what people call the oversold region, the support region, the demand region, where price is most likely going to pull back up from. All right, so having seen that there is this much momentum in the market, I'm not going to be thinking of selling at this point. I'm going to be thinking of buying instead. But this strategy is not about buying, it's about selling, because we are just catching some candlesticks and leaving the market. We are not trading the spikes, we are trading against it. Okay, had it been I wanted to catch spikes, I'll be looking at buying at that level. This is already moving up from that point, right? So having seen this, another thing you need to look out for is that we have you can go to a higher time frame and check to see that we have a bearish momentum. You can see that price has been selling for the longest. So that gives us a clue that the market is going to keep selling. Okay, so after that I want to go to of course I don't like to skip any time frame, so I want to just look at every time frame and keep seeing that there are more bearish momentum. All right, obviously you can see that the pressure here is more bullish than bearish, so taking a sell would be a dumb thing to do, even if the indicators are asking you to do that. To be a dumb thing to do. So you want to wait for price to print more of bearish momentum, just like what's happened around this region. You can see around this region price was at resistance level, right? Price was at resistance level here and was signaling selling momentum more. You can see that price was closing more of bearish. Okay, and then if you look at the indicator window of our chart, you see that our indicators were at the level 90 of the what is it called, the RSI. Price was around that level of 90 of our RSI. Okay, price was around there. So we'll keep we'll keep going down to different time frames till we get to the time frame where we are really interested in. Now make sure that every condition I just explained on the higher time frames play out before you think of taking a sell. Right now I'm not going to be thinking of selling, even as the indicators has moved to the level 90 of our RSI right here. Okay, I'm not going to be thinking of selling right now until the higher time frames change direction, change momentum, until sellers step in and show me more bearish momentum. Then I'll now come to the 1 minute time frame and I'll look at the indicators, the indicator window. I want to see that this red line, right? I want to see that it comes to this level, it comes above this level, just like what happened here. Let me show you guys. Good. Just like what happened here. I want to see that it comes to that level and slopes down from that level. I want to see that it starts selling from that level. I want to also see that my awesome oscillator, Chimoku, every indicators here, I want to see that they come to this level and they print a bearish signal. That means they start going down from that level. They go from green to red, they start going down from that level. And also having in mind that the higher time frames had also shown similar signals, right? That is the only time that I can comfortably make an entry. Okay, if you notice, when everything converged here, price started selling. It dropped from there, and you could take up to like 10 candlesticks and leave the market if all of these conditions are met. If you just wait on the 1 minute time frame and wait for all the indicators to go up to that level 90 of the RSI, and then you start selling from there without looking at the higher time frames and seeing that the higher time frames also signal the same thing, then you might be making losses. You might be making more losses than the indicators can actually give you profits, but you most likely make more losses than profits, because like I said, the higher time frames gives you a hint, a clue of where the market is going to, the direction of the market. It gives you a better clue of the direction of the market than the lower time frames, while the lower time frame gives you clarity on when to execute, right? When to execute. So you're not to overlook any time frame, but you're also to understand that wherever you want to go to is where the higher time frames are pointing at, right? And then whatever the indicators are saying at that point, if the higher time frames are not telling you to go that direction, you can't follow the indicators. That is when you hear that indicators lag. Well, indicators basically are built to follow price movement, like I always say. So they tend to lag most of the time. So this is why you need to have a clue of where the higher time frame is pointing at, so that if the indicator also point at the same direction at the same time, then you could tell that they are accurate at that point. I hope that makes sense. Now, if all of the conditions are met, you most likely see that whenever all the indicators converge at the level 90 here, just like here, whenever they converge at the level 90 here, right, you always see a strong push to the downside like this. So if you notice here, there is a lot more opportunity to make more profits from the market here. You can see you could catch even up to 30 candlesticks at that point. And if you have good equity, you risk wisely, you know you make a lot of profit from this, right? You know you make a lot of profit from that. Okay, so that is that for the boom 1000 index market. So I said I was going to show you guys how it works for the crash 1000 index market. Now it works the opposite way for the crash 1000 index market. As usual, you're going to be looking to buy instead of selling. This time around, you're going to be buying the crash 1000 index market instead of selling. I haven't tried this strategy on any other boom and crash markets except for the crash 1000 and the boom 1000 index market. So if you want to try that, you can go ahead and practice it first and drop your reviews. Let us know in the comment section how it went. Did it work for you on the crash, any other boom and crash assets, or did it not work? Just let us know, so that any other person who might want to attempt it can learn from you. So for the crash market, you want to be buying, like I said, right? So this time around, you're looking for price to converge. You're looking at price converging at the support level this time around. Okay, all right. And they are looking at, this is on the lower time frame when you want to execute. You're looking to see all your indicators converge at the support level here. Okay, if that happens, you can see all this. You can see this much movement to the upside. You can see how much candlesticks you catch, and this is most likely to work more if on the higher time frame the market was printing more of the bullish momentum. You can see that for the longest, price had been pushing upwards, right? You can see that there is more of bullish candlesticks, and price has been respecting the direction and going in that, has been respecting the trend and going in that direction. Okay, so if this time frame, the higher time frames, point at a bullish momentum, a bullish direction, right? And then the lower time frame also converges, like the indicators converge at that level, at the oversold level here, right? It converges there and then starts pushing up from there. The red guys, the red bars here, becomes green and starts pushing up, and then that's your signal to go for a buy. All right, this is for the crash 1000 index market. Go for a buy and you most likely make good profits from this. Now this is not sustainable. It's just something to make quick money from. If you want a more sustainable way to make money from the market as a professional, you should learn to analyze the market yourself without this, what we call naked trading. You don't use indicators. You look at the charts, you read the candlestick bars, you read the candlestick patterns, you could interpret the candlesticks basically, and you could detect the trend for yourself just by looking at the chart patterns. Okay, that is what I teach in my mentorship program. If you're interested, it's very affordable. The next batch will come in soon, so make sure you join in. In fact, I'm going to be pouring in every single bit of my experiences in the market and also in teaching, right? I've been coaching people, helping people become good traders, professional traders for the longest. So I'm going to be pouring out all my experiences, both as a professional trader and as a coach, into this program, and I'm going to be teaching you guys the most simplified way possible to become a pro trader in less than no time. It's very affordable. You can reach out to me. My WhatsApp number will be in the description box of this video so that you can learn to do it without indicators. As such, you will just use indicators to confirm what you've already seen. That's when you can actually beat your chest that you're a good trader. All right, when you use indicators to make money, you're just making money. You're not a trader, you're not a pro trader, you're just making money from the market. But when you learn to do without indicators, you gain respect from people, you respect yourself, of course, and you'll most likely make more money than if you're using the indicators. So I'll see you guys in the next video. Reach out to me if you want any of our services, or if you want clarity with anything, reach out to me. My WhatsApp number, like I said, will be in the description box of this video, and our free Telegram group will also be in the description box of this video, so you learn a thing or two. You can also be a part of what we have on there. Now let me quickly show you guys the indicator setup. So for awesome oscillator, we're using level 85 and 15. All right, and then value up, I'm using green and red. Okay, click down when you're done with that, and you are good to go. You don't even need the levels for this, because we are going to be using the RSI levels instead. So you cannot use the two at the same time, so you can just take that out and forget about levels for awesome oscillator. Let's focus on using the RSI levels only. So you click down when you're done with that, and then the next one is the Chimoku. For the first Tenkan Sen is 9, the next Kijun Sen is 26, the next one is 52. Just like what we have here, you can just copy the same setup. The styling, the first one, Tenkan Sen, is red. I'm using red there, 3 pixel of course, and then the rest I'm using the background of my charts. If you use the white background, just like myself here, you can make all the colors white. If you're using the black background, make all the colors black. Click down when you're done with that, and we move on to the next one, which is the relative strength index. And for this one, we are using period of 14. Applied to close levels are 80, 20, 90, and 10. All right, 80, 20, 90, and 10. For visualization, I'm using the same color as the background of my chart. And then for levels, when you go to levels to hit the levels, change the style here and use a color that will be visible on your chart. Okay, you click down, you're done with that, and you are good to go. You have your setup ready.